It's kind of wild, but having a bad product, that's actually not the main reason small businesses end up closing their doors. It's actually something much scarier. Running out of money is literally the number one reason small businesses fail. I mean, whether you're launching a cozy local shop, an online startup, or your own freelance gig, running out of cash is the absolute ultimate threat to your passion project. It's a harsh reality for sure. Okay, let's dive into this. I want you to think of your business exactly like a building. Is your financial foundation actually strong enough to survive? Because think about it. If that foundation is cracked, it honestly doesn't matter how gorgeous the design of the house is. The whole structure is eventually going to come tumbling down. Proper financial management is quite literally the only thing that determines if you'll be standing strong years from now. So, welcome to today's Explainer. I am just so super thrilled to have all you focused learners here with me today as we unpack the absolute best insights from The Architect's Guide to Small Business Finance. You can go ahead and consider this presentation your ultimate, super solid blueprint for financial resilience. We are going to build something so amazing and so sturdy together, I promise. Here is our literal blueprint for today's Explainer. We've got 5 steps. 1. Laying the financial foundation. 2. Mastering cash flow management. 3. Navigating funding and taxes. 4. Building business resilience. And 5. Focusing on long-term growth. Now, I know finance can feel like a super dense topic, but don't worry. We've laid it all out securely, step by step, making it totally manageable. We've got this. All right, let's move to and see how this builds. Section 1 is all about laying the financial foundation and building that solid base. Just like building a sturdy house, your business needs an absolutely unbreakable foundation before you can even think about putting up the walls. Step 1 is honestly the most vital piece of the puzzle. Separate your personal and business finances. Seriously, don't mix them. By simply opening a dedicated business bank account and using it strictly for business transactions, you instantly simplify your bookkeeping. This one little move makes tax filing a total breeze and gives you a crystal clear, highly accurate picture of your company's actual financial health. And that brings us right to step 2 of our foundation, which is creating a realistic business budget. The source material is super clear here. You must include and track essential items. We're talking startup costs, operating expenses, marketing, payroll, software subscriptions, rent, utilities, and of course, emergency reserves. Enthusiastically tracking every single dollar that flows through these specific categories is exactly how you understand where your money is going. And you know what that does? It perfectly prevents all that sneaky, unnecessary spending. Moving right along to Section 2, Mastering Cash Flow Management. Think of this as the plumbing of your business. So, now that our concrete foundation is poured, we need to install the pipes. Money has to flow in and out of your business smoothly, without ever getting blocked up. Now, what's really interesting about this slide is the massive distinction between being profitable and actually having positive cash flow. Listen closely to this because it's a game changer. A profitable business can still fail. No way, right? But it's true. If you don't have enough cash available right now to pay your immediate bills, all that profit on paper, it won't save your structure from collapsing. So how exactly do you keep those financial pipes totally clear? Well, you need to actively monitor when money comes in and exactly when your expenses are due. To make this happen, you've got to encourage your customers to pay their invoices as quickly as possible. And on the flip side, you have to actively avoid taking on more expenses than your business can securely handle at any given moment. It's all about keeping that flow perfectly balanced. To monitor this flow effectively, you definitely need the right tools. Here are your core financial reports. You've got your profit and loss statements, your balance sheets, and your cash flow statements. Keeping accurate records of these is absolutely vital. Using accounting software, or better yet, hiring a professional bookkeeper to generate these exact reports is exactly what leads to highly informed, rock-solid business decisions. You don't want to be guessing here. All right, on to Section 3, Navigating Funding and Taxes, which provides our structural support. Let's keep building upward, shall we? This is where we put into place the structural frameworks that help you deal with external forces and truly scale your financial growth. If you want to finance that growth, you need some building materials. Here are your primary business funding options. You've got personal savings, small business loans, business lines of credit, angel investors, or even venture capital. But remember, and this is super important, before you borrow a single dime, always act like a careful architect. You must thoroughly compare interest rates, repayment terms, and the potential return on your investment. So the crucial point is perfectly captured in this fantastic quote directly from the source material. Set aside a portion of your income for taxes throughout the year to prevent financial stress. I can't emphasize this enough. Taxes should never, ever be ignored. Failing to understand and prepare for federal, state, and local tax requirements will absolutely crack your beautiful structure right down the middle when those payments are suddenly due. And here is a super essential, friendly little tip. Consult a qualified tax professional to find all those legal deductions. You can think of a tax pro as your incredibly smart, expert contractor. They know all the complicated building codes, and they can help you safely identify legal deductions to greatly reduce those unnecessary tax expenses. It's like finding hidden treasure that actually protects your house. Next up is Section 4, Building Business Resilience, or as I like to call it, putting the roof over your head. Okay, so we've got the walls up, but now we need to protect your beautiful new house from unexpected financial storms. 3 to 6. That's the magic number. Every single business should maintain an emergency fund, and this number represents the exact months of operating expenses you absolutely need saved up to keep your doors open when things get tough. Now, you might be wondering, why do we need such a big buffer? Well, because of unexpected expenses. Things like surprised equipment repairs, sudden economic slowdowns, or temporary revenue losses. These financial storms can hit at literally any time, usually when you least expect them. Having those 3 to 6 months of operating expenses saved up acts as your sturdy, weatherproof roof. It helps your business survive difficult periods without ever having to rely on incredibly expensive debt just to stay afloat. And this brilliantly illustrates another vital layer of defense, the massive benefits of strong business credit. By consistently paying your bills on time and managing your debt responsibly, you build a credit history that does wonders for you. It improves your chances of qualifying for loans, gets you much better supplier terms, and helps you secure lower interest rates. It is quite literally an extra layer of structural armor for your business, keeping everything safe and sound inside. Finally, we've made it to Section 5, focusing on long-term growth, expanding your house. Our house is totally secure, the roof is solidly on, so now it is time to think about adding some amazing extensions. We're stepping away from just chasing quick, short-term profits and focusing entirely on a true long-term vision. To expand, you have to reinvest. The source highly recommends taking a part of your earnings and reinvesting it straight into things like marketing, technology, employee training, and product development. Putting your money consistently back into these specific areas is exactly how you strengthen the business from the inside out and dramatically increase your future revenue. Which leads us perfectly to this vital definition of sustainable growth. The most successful entrepreneurs understand that this kind of growth requires patience, incredibly careful planning, and disciplined financial management over short-term profits. Now, I know what you're thinking. Financial discipline might not be the absolute most exciting part of running your business every day, but for all you focus learners out there, please remember this. Making smart, disciplined decisions with your money daily is the true foundation of lasting success. So as we wrap up today's explainer, I want to leave you with this final provocative question to really chew on. Are you just making money today, or are you actually building a business that lasts? Take this blueprint we just created together, apply these structural steps, from separating your finances to investing wisely, and go build an incredibly resilient business that will stand the test of time. Keep learning, keep building, and I will see you on the next explainer.